mostly doing some technical analysis on the bigger ETFs, I guess. Gonna look at QQQ, the SPY, the Dow. I think there's, Intel. We're not gonna get too deep into this, but Intel did cut its dividend to 12 cents. Very interesting. I mean, that's a whole conversation for a separate video, but just wanted to point it out. The video that I made, I think on last Friday, I filmed it like a day or two in advance. That's why I didn't mention it. But anyway, main topic of the video is technical analysis on the QQQ. So let's go big boy stuff and then down. So I mean, we really shot up here. Is that COVID? Yeah, that's crazy. This is monthly candles. So we are very far away from COVID now, almost 3 years. That's crazy. This bottom trend line is probably where the absolute minimum it might, you will definitely see a bounce here, so I'm trying to say. It could definitely go below that, but I think it's highly likely that it probably will remain above that line. But again, it could fall below. So, upper trend line, I mean, there is really no upper trend line, that's why it's so weird. But I labeled this, I'm not really that confident on it, but yeah, there's some upper trend line here. It's definitely not, this is a huge exception, ripping this much out of COVID. Like, I don't know, I feel like that was dumb. Okay, but we don't need to talk too much about that. So upper trend line is really non-existent. But now we're in this, so we hit like $400, a little above that. That was the kind of max on QQQ. And now we're in oh my gosh, I can't talk. We're in a big decline since then, and the top was 11, let's say January 2022. So about a year ago, we've been just declining. Since then, we're down, or the stock ETF moved down about 25-30%, so pretty bad. Is that actually recession territory? I think it is. So we kind of caught at, what is this, like 275, we'll call 280, somewhere in that channel. 1, 2, 3, 4, like 5, almost 6 months of kind of holding this, but it's still below this trend line. Last month we finally poked above. We're actually closing out this month real soon too, so if this is the monthly candle that's gonna end, it's gonna look pretty bad. What's also cool to note is, like, look at all these candle wicks, or like this wick here, this candle body here, just kind of signifying that this trend line, or one way to interpret it is that these candles help confirm this decline, and that more selling pressure was to come. Obviously hindsight's 2020, but so we have a support, this grinding support, like lower line here. This upper line, pretty low confidence. We finally kind of broke out of this line here on multi-candles, but the breakout doesn't look that strong. We have let's go to, it'll be easier to explain on weekly candles. Here we got COVID again, we got that line, we got the upper trend line decline. So on weekly candles, we broke out 1 week, 2 weeks of nice upward momentum, although the volume actually was pretty good. Into that move, we had increasing volume, so that's pretty good. However, we hit like about 300, and we've had 3 weeks of kind of big candle wicks downward, or not downward, but just big candle wicks on the sell side, I guess. Not the buy side, so kind of a little more bearish. Last week we ended with that big, not that big, but relatively, that's kind of a fat red candle. The volume though wasn't that high on both red weeks, even the week in the middle, which I'm not sure how to interpret that. But we had to move out of this year-long decline. From there, we moved about 10 to 12%, hit a resistance, had a lot of selling pressure with these 3 wicks that showed that, then fell down So I think it'd be better from a bull side if this broke out, overshot this target maybe, and then pulled back to it, and then went above, or at least like these 3 weeks just selling is not really supporting the bull case. Now, the reason why, so let's say it breaks out of here, then it pulls back to here, that's not that good, because technically you're back exactly where you were before the breakout. Now again, it could break out here, come back down to 300, it was 280, then shoot up, yeah, of course it can, but I'm just saying from my point of view perspective, what I would want to see if I wanted to see this thing rip higher is a shoot out of this, like overexcitement, over past the $300 level, and then a selling pressure to pull back 1 week or so, and then I hold at this 300. Definitely didn't get that last week. Something else I wanted to mention there. I mean, yeah, it did break and then move like quite a bit out of there, but again, I'm expecting it to pull back, but it just doesn't make sense to pull back to that level because of where you technically didn't make any gains that like month and a half. If it just pulls back to that zone then shoots higher, like, I don't know, just from my perspective I think that's interesting. So I guess moving forward, tricky obviously. So the actual hard and important part, I think this does pull back to 280 maybe in a week or two. There's too many sellers in this zone and not enough buyers. You got these massive wicks on the top of these candles. We come back down to here, maybe we chop around, but I'm still in the kind of more bear case where I think we pull back down to this this bottom trend line here. I mean, I think this is going to happen over another year or two. Maybe 20% more down, maybe not, maybe we catch like 250 or something. Maybe it only falls like 10 more percent, depending on how long we stretch that trend line out for. Like, let's say the next 200 days, it falls like 260. That's gonna be about a 10% loss. I think that's kind of possible. I mean, again, rates this year are gonna remain at like 5 to 5.5%. That's what the Fed's predicting. I think it might even be a little higher. I think they're being a little bit, what's the word, conservative with their assumptions. And that's going to put a lot of pressure, especially on tech stocks and other growth stocks, because you can just buy bonds and get a good yield. So I think for the rate that those bonds and other assets are selling for, I think this market's still very expensive. Again, that's my opinion and interpretation. I could obviously be wrong, but I haven't bought anything in the market in a while, and I know that the market's fallen a lot. So QQQ is down, let's say 30%. The SPY is down, let's say 15-20%. I get you could buy the dip, but I think I want to buy the dip down here. I don't think people are fearful yet at all. I just think some money moved out of the market to buy other bonds. Buy other assets like bonds. Down here in COVID, that's true panic and selling and fear. This is not, and I'm not gonna wait like forever, but I am set with some positions that I have. I think that's good. I'm waiting for a big drop to put a large amount of cash into the portfolio, because I think those are good buying opportunities, and the stocks that I want to buy now I don't think are that good of a value. I think they'll get a lot cheaper, and I'm okay waiting. In the meantime, I'll just buy bonds. I'm perfectly happy doing that. What does it say? White House National Security Advisor says China has not taken possibility of providing lethal aid in Russia. Okay. I think, so we'll go to the SPY weekly candles, or let's go monthly really quick. Here's the bottom trend line. That's massive. Like, that's only up, and it can catch that, but it can also not catch that and fall below. Definitely possible. Again, we could have another 10 years of what happened from the dot-com to the Great Recession. It could very easily happen. I think people just look at the last 10, 15 years of history and they think, oh, this trend line will continue continue up. Sure, it might, but I don't know. So I'm at least waiting for, on the SPY, maybe another 8-10% drop, but realistically maybe a 20% drop. That's when I get kind of more interested. So the SPY, I think we will come back, maybe not to this bottom trend line, but maybe definitely this upper trend line here. I think we way overshot it. We're way out of the normal trading range we've been for a while. I think we're definitely coming back down, but going on weekly candles, this upper trend line, here we had like a year of downward movement. We kind of broke out, but it was kind of not that, what's the word, like significant. Not a lot of volume spike, or not a lot of volume out of the move. We hit this upper trend line and now we're just fading back. I think we easily, that was my prediction. I don't even know when, maybe like a couple weeks ago or a month ago. No, it couldn't have been a couple, it had to be like, at least during these weeks, that it was going to hit that trend line and fall down. I think we head down to maybe 360 on the SPY ETF. By the time it gets there, maybe 375. Nah, I think 360. Maybe 350, depending on how sharp it is down. I think maybe, let's say 2 months down to 360. Again, we can slop around and shoot up, but that's not what this price actions tell me. And again, I'm not an expert or anything like that, but I just like to observe and watch and spectate and then form a decision, So, again, I'm not trying to be super bearish or pessimistic, but the market's expensive and I think it gets cheaper, and it's like, I don't think enough people are still fearful of buying stocks, especially when bonds are now 5%, which is high, but it could get a lot higher. I just don't think people see I think people just think the stock market's gonna rip back up, which it can, depending on how the Fed decides to play this game, but I don't know if they can. I think the Fed's hands are kind of tied, like, they have to do something, and I think buying the dip is good, but I don't think this was a dip at all. Like, let's look at like weekly or monthly candles again. Like, where's the dip? I don't see the dip in the relative history. Even the COVID dip, I thought it was going to go a lot lower. I still did some buying, and I think, yeah, it's important to buy. People say not to catch a falling knife, but like, I'd rather buy an asset that's cheap, that I think is at a good value, than, I don't know, you can't wait forever to buy something and you don't know where the bottom is. But if I say this asset should be worth this and hits that valuation, it's like, okay, maybe I'll just pick up some shares. I don't think this is a dip at all. This was just an overinflation or a larger move than what should have happened, and then we pulled back to still large or a huge increase in where the actual market price should be. I think we see at least a little bit more downward movement this year, maybe next year, I don't know. But in the meantime, I'll be raising a lot of cash and just being patient. Like, I don't know, people say, I always want to at least acknowledge this, because it's the counter argument to exactly what I'm saying. And it's like, well, just dollar cost average, the market usually always goes up, and you can't time the market. But I think just using some common sense, looking at where the market is relative to where it probably should be, just by using common sense, like, you see this, like, this does not, where's the dip here? I don't know. And then, I obviously own stocks and other assets, so I'm in the game, but I don't necessarily want to add, because I'd rather wait for it to get to a valuation. I think it's important. Yeah, sorry, I'm having like internal struggles, like, trying to explain this. There's no reason for me right now to buy stocks. I think more people should, but I think more people are more likely to float to bonds, or at least add more money to there, because it just has a lot more. Again, it depends on risk reward and balancing the portfolio, but to me it just makes so much sense right now. So I'll wait till the market goes lower. In the meantime, I'll be picking up some bonds and stuff. Real quick though, I want to look at gold, silver, and stuff. I haven't looked at this stuff in a while. Silver had a huge run up. It's crazy, 25%. Now just fading all the way back down. AG stock down to like $6. Absolutely crazy. I'm so happy I sold this. Like, gold and silver is just so hard on this, but this whole AG trade and other stocks like in that sector, just very stressful. But we go back to gold. What's gold doing? Gold, unsurprised, went actually back to like almost 2K. Wow, that's actually important. It didn't hit 2K. The fact that gold keeps fading at like just by 2K is kind of concerning. Every time it kind of hits less and less. So I don't know. It's a hard asset to own in my opinion, but it's good to conserve your wealth at least. But yeah, I think that's kind of all for this video. I think the market goes a little lower. Definitely see what happens. Again, I don't want to be too bearish, but I just like to be realistic. Thanks for watching, everybody. Stay tuned for some more. Check out the Discord, and